So welcome to the FNSACC407B accounting webinar. Today we'll be running through some examples that are in your workbooks and a summary of some of the concepts from the previous webinar sessions on cash and accrual accounting. So this unit is very repetitive with a few new concepts that have been brought in and some revision of previous areas. So hopefully you've all managed to work through your workbooks to make this process a bit easier and assist you with your assessment. My name is Sheree Peck and I'll be taking you through these concepts today. Today what we're covering, as I said, is similar transactions that we have done in the previous two units and obviously bringing and covering a few new topics and specific areas to assist you with your assessment. It will help and make a bit more sense with the entries that you may be doing in your workbook at the moment. So today we're going to use a demo company file, and so my screen is just going to go blank for a moment while I bring up that file, so just bear with me. Okay. So here we've got a demo mile file, and basically we've created a new chart of accounts so we can post to these accounts. So no entries at the moment have been entered. It's just the account codes, and we're ready to go, and they've been tax coded. So if we have a look at that account list, you can see there the chart of accounts has been developed and the balances at the moment are all zero, and some tax codes there have been entered and some counts have been obviously linked. So as you can see, as I've said, the balances are zero, so there are no entries in the account codes, so that we're all ready to go. So I can show you these entries that you'll need to do in your assessment, and obviously one of the first things we're going to have to do is go in and do the opening balance balances. So we'll go up to the set up area up the top, and we'll go to balances. And we'll go to account opening balances. And this is where we would go and obtain the balance sheet figures from the financial statement from the accountant. And we'd have those opening balances. So we want this to balance as we know from the accounting equation. We require this to balance. So we'll put in some opening balances and ensure we don't have anything that's out of balance or an out of balance amount. So we'll go in and put the entry to each account. The opening balances, and obviously you'll be doing this from your assessment and the amounts that you've been given. In the real world, obviously, you would obtain his information from your accountant, and they would give you the opening balances for each account to get your accounts going. So I'm just going to quickly go in and enter some figures now. So the NAB account or the general check account. I should say. We're just going to put in $6,000 there. If we go down to cash on hand, I'm just going to put in $500 there. Our trade debtors. We're going to put in $15,000 there. Stock on hand, just 110. Inventory, I've missed. So I'm just going to put in 1490 there. Office equipment at cost. I'm just going to put in a figure. Yeah. There. Office equipment at cost depreciation, figure there. Our accounts payable, 15,490. So obviously I'm just making these numbers up as I'm going along. When you're doing your assessment, you'll be putting in the figures from the assessment, and obviously we'd grab the figures from the accountant to put these in, but we're just putting in some figures at the moment. And obviously at the end we want to make them balanced. So we're just putting in the settlement sum there of 10. And now you can see we're out by 12,950. So our retained earnings amount so we're not out of balance would be that figure. Okay. So as we can see there at the bottom, amount left to be allocated 0. So this is